Good morning. My name is Scott Redler, Chief Strategic Officer at T2Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have small green arrows around the world today as many regions got oversold. In Europe, the DAX is up 0.3%, and Asia is still quiet as the Nikkei is still closed. Scott, there's not too much to go on, but at least we're not seeing headwinds as we had the last two sessions.
Yeah, the last two sessions, you'd wake up in the morning, look at Europe, it was down 1%. The Hang Seng was down, over 2% or whatever it was. Today, everything's a little quiet, and bouncing small. And that's what it is. Sometimes you get an oversold bounce, sometimes it leads to more. At this point, we'll take it for what it is, just a little less pressure. If you look at the DAX, it's already well off the highs. Let's hope that it stays green for the session. You look here at the EWG, which we talked about how it's been somewhat breaking. Why is it breaking? You know why? Because it tried to get above the 200-day and failed. Okay, so we'll see if this rally back up takes it back here and gets potentially rejected. So that's something that I think guys will be watching over there to see what kind of bounce you get in Europe, because as of right now, it's proving to be pretty feeble. So here is resistance. This is your trend line support. So if you wanted to write down yesterday's low in the EWG, well, this has to hold as 25.85 or 25.65. If not, you're going to see some headwinds come back again either tomorrow or later next week. Here's your resistance, a little bit closer to 26.18. The Hang Seng or the FXI, not really much to go on except for this is just bleeding lower. Okay, you look at this trend off the lows and it broke well up here. So at this point, no help from Asia, and I guess we'll see what happens when the Nikkei finally opens up after Golden Week, and we'll see if what kind of volatility that brings.
S&P futures are up 6 to 7 handles off of morning highs as oil is up 2%. Do you think that this is just an oversold bounce as the oscillators just hit over 50?
Yes, anytime the oscillators get north of minus 40, that shows that we're oversold. And a lot of guys are saying, well, Red Dog, we hit minus 90 earlier in the year, but the oscillators hit minus 90 or minus 95 when we were in liquidation mode, when it looked like everything was crashing. So at this point, this correction doesn't feel like a crash. It feels a little bit like a pullback off highs based on some weaker economic news and some earnings that didn't provide any real leadership. So, minus 50, remember yesterday I was like, I think that buying, spiders 203.50 to 204.50 first time it sees it, and covering shorts is better than pressing. Well, you have to play the ranges. And if you look here at the S&P, you'll see that, the market stalled, up here near prior resistance. And this was a wall of resistance, okay? And this was, your other level. Why did it stall? Because technology earnings were pretty poor, and also look at the size of the move that we had. So here was your double bottom that happened earlier in the year. Here is when you could have bought the dip and it showed commitment to the double bottom, and then this is when the trend started above the 8 and 21 day. And this trend has been broken, okay? So when an ascending channel like this breaks to the downside, okay, you reduce risk and you switch some gears, which we've talked about. But there are ways to make money each day trading it. So if you would have just got short at 281 when this broke, you could have covered on Friday down to 252 and maybe even played a small bounce back up to retest the trend line. And then yesterday, basically, it's trying to hold this bigger support going sideways right around the 50-day. So the question is, does this descending channel, remain resistance? And if that's the case, you're probably not going to see much of a bounce back, north of this 2070, 2071, where if you covered yesterday, maybe guys will be looking to lay it back out today or tomorrow into this 2070. I know, I come in long, I've already sold half, and I'll see if I can hold half to get back to that trend line. But ultimately, I wouldn't be so surprised if at some point, in the next month, we don't at least hit this, 200-day-ish, which comes closer to 228.
Technology and the Qs are very oversold. What level of resistance can a bounce take us to?
Well, again, they're very oversold because they've also been pretty broken. They've led this move lower, and we've talked about how, technology leading to the upside is much healthier than leading to the downside. So you have to be very careful when you try and play an oversold bounce like we might see in the next session or so. You look here at the chart of the Qs. The Qs basically, if you draw this, okay, failed at resistance. This didn't even get all the way up. It failed at the descending channel right there. And then you look here, your ascending channel then broke to the downside. So overall, more faulty than constructive. Okay, and then we lost the 200-day, and now look where it came into. So at this point, it's bouncing small, okay, but it doesn't mean, that it's done going down either, but you have to pick and choose your battle. So with this, we'll see, kind of get above yesterday's high. Can the Qs get above 105.48 and bounce back towards resistance? Remember, this bounce went and retested this prior support that turned into resistance. If this does kind of the same thing, you'll probably see, some resistance come in a little bit closer to, 106, which gives you a little bit more room. And if they want to push the envelope, maybe even, 106.72. That's where the 8-day comes down. Remember when it was above the 8-day, following it the whole way up? Well, now the 8-day has proven to be resistance, which it's extended down from.
Bios have been very weak and broken, mostly all upper levels. Are you going to take a look here for maybe a small bounce? Are the IBBs worth a look?
Like you said, like most upper levels have all been broken. So when upper levels break, you reduce risk. Maybe you get out of your longs, you get short, and there's been no bounce. So if you've been trying to play a bounce, you've probably been frustrated, and that's what happens with laggard sectors. Why is the bios still a laggard sector, even though we were able to make surgical money out of it about 20 points a few weeks ago? Because look at the moving averages. Look at the 200-day here. On a macro basis, the bios really didn't have much of a bounce. This was when last year's trend broke. This is when it had another ascending channel, broke to the downside, and then here you go again. And all the bios really did, I hate to say it, is bounce back to prior resistance. So this was last year's support going sideways. So although we had a nice trade here, okay, it failed at resistance. It never even took back the 200-day. Here it went back to it. Here it didn't get there, so you had to be careful. That's why I said if it breaks 283, be careful. And if you want to wait for confirmation, 277 is that spot. So now here we are back, a little bit closer to where it broke out from. So, is it worth a look today? Yeah, I kind of think so. The futures are up, so it's probably up a little bit. See if they try and sell it and they can't get any traction, then maybe you could use this 257.36 as a pivot for some type of red dog reversal today. I would not be trying to short the bios today, but doesn't mean it's going to bounce, and they still remain pretty broken.
Let's talk stocks, as we have two earnings reports out today. We have Tesla and Alibaba, both up pre-market. Will you look there for opportunities?
Recently, it's been better to trade the earnings names the day after. After they already set their ranges, you get a post earnings low, a post earnings high, and you get to use that versus just trying to guess. So if you're going to trade something like Tesla, which I think people were very happy that they pushed their production cycle to 2018 for 500,000 cars. You got to be careful. This right here is resistance, and this is where it couldn't get through pre-market. So now I think it's up like $11 or so. So this would be resistance one. So what I would say is, I would let it trade and then see how much of today's gap holds. Does it open up $11, hold and go up 15, and head back into this resistance? Or does it open up, $7, $8, $9, $10, and then only, close up 3, which would probably be something that would take some momentum out. So let's see what happens here. Resistance 1, resistance 2. Alibaba, the report to me was fair. Like I said, at least, if you're long Alibaba, it's not priced for perfection. It's come in from the 81 and change and found a little bottom tail. So at this point, I think it was as high as 80 and then sold down. For Alibaba, I'm going to wait to see if you get something like this. Remember this, gap up that happened here that was protected. Then at least we had a gap to trade off of. So I'm going to wait to see what kind of gap we have. If it's a strong one, if we open up 250 and it only closes up 50 cents, then probably is going to be just a whole lot of choppiness. If it opens up, $2 and closes up $3, then maybe that's going to show you that there's some power here, and that at some point, could take out the resistance where it failed at a few weeks prior.
The two strongest names that already reported are Amazon and Facebook. What levels need to hold for the momentum to remain strong?
They need to hold those earnings gaps, and keep those shorts trapped and keep people thinking that it's going to move fast. So, Amazon, if the market's going to kind of be stable here and get an oversold bounce, and if it happens and stays this way for a few sessions, Amazon's something to look at. You look here at the chart. I know yesterday some guys, bought the dip when the futures are down. Well, here is this was your post earnings move with the big gap. You had a quick little follow through the day after, and now it's basing. Yesterday you have a higher low. You could write that down. You could trade against that if you don't want to give it all the way to the earnings gap. That's 662. So now the question is, can it continue to build, go sideways, and then take this out, and then take that out. In order for momentum to happen like that, you need a really strong market. So we'll get some clues on whether we have that. So for today, see how it deals with this pivot, see if it gets above 674 and pushes above and fails, or pushes above it and continues, and that'll give you some clues about today's action. Facebook also, actually, I traded both yesterday, but I'm only long Facebook. Facebook has been holding that resistance pivot and that resistance pivot right here above a big gap, letting the moving averages catch up. What I like to do is I'd like to see it get above and stay above 1873. If it does that, that'll probably then open the door for a move back to the post-earnings high here, which is 120.79. What I typically do if I'm long, I sell some up 50 cents or so, and then I see if it stays strong. If it stays strong, gets above this, I'll try and hold it back to this pivot, because I know at this pivot, I'll be a buyer if it gets above. But the question again is, in a weaker market with a lack of momentum, can these two names, be on their own island? And that's what this is. This is a little bit of an island above the gap, and we'll see if that continues.
Are any of the names in the penalty box worth a look at for a quick trade?
Google's had some news the past 2 days, and they're still trying to keep that in the game. Google talked about the autonomous cars, and now Google's out talking about YouTube, a way to monetize it and have its own channels. Google itself, there's a lot of institutional money in this, so I don't think they're going to just let it fall by the wayside. You do have some really big support right here going sideways, which it's trying to hold. Okay, and then here is your lower flag. So in order for this to be maybe a trade, it's going to have to get above 715 and stay above it. But again, the earnings gap is all the way up here, so maybe it wants to do some packing and filling. Overall, though, this channel has a lot of money trapped. So I have a feeling that they're going to keep it in the game, and there are small trades, and maybe there's one today. If it opens up and goes red, be careful that this big support could become vulnerable, especially with the 200-day there. And lastly, Apple. I played it for a quickie. With Tim Cook was on fast money. I didn't like the way it acted yesterday. What it did is it pushed through the prior high and couldn't hold it. Some people use that as a potential sell signal. Okay, right there. So at this point, you still have a huge, massive hole in the stock. You're still below the 200-day. You're below the 8 and the 21-day. So I would be careful. Some will probably start cheating if this gets below 93.68 right here and stays below it. I bet you some people will be getting short because they're going to be thinking that this 92-ish area could break, and if that happens, again, I've been showing this macro pattern for quite some time to give some caution here. This big macro pattern with crazy support around 92. If this were to break, you're going to be seeing a stock that probably heads closer to 85 relatively quickly, which would not be good for the overall market.
Metals have come in for 3 days now since, Scott, you said to sell them on Monday. Are the GLDs worth a look here, and what about the miners?
Well, it's interesting. Yesterday, I sent out a tweet. I'm like, I think, if you're short, I'd rather see you be covering the GLDs sub 122, close to 121.5, and even the miners. And then I was at the gym lunchtime, like I normally go, and I missed my entry. So we'll see if we get another one. If you look here at the GLD, you'll see that. Oh, look at this. This is the daily chart. Let me get it a little closer up. The reason why I sold it on Monday was because my day count rules. This was like day 1, day 2, day 3. So I sold it right here, not knowing that it would be the short-term top. But anyway, all it's really done so far is come back and retest the 8-day. So retested a prior breakout, still hanging around. So technically this still looks fine. If it were to maybe get back here again, maybe I would nibble the GLDs versus it. I'm still in my call spread. We bought the calls for the 120s somewhere around here, and then right there we sold the 124s out another week and a half or so. So I figured hopefully that call spread works out. By doing the call spread that's funded by a nice move, it gives you the opportunity just to sit in it versus overtrade it. But at this point, I would say use this 121.51 to trade against in the GLDs. I really don't want to see gold go much lower than that for momentum to leave. And then some of you guys had a great trade with the miners, great short. Okay, I only did it for a day, and it wound up going down 3. So with that being said, if you sold into that because this was your buy price, or got short there, yesterday we mentioned covering. It didn't really go up much. So for today, look for a red dog reversal here. Maybe it tests the 21-day, comes back up, and you could be a buyer somewhere around 23, 29 for a quickie. But again, you don't really want to see a breakout failure so quick, so you have to be a little careful there. And if you're trading the extra juice in the nugget, similar scenario. Wow, look at this. I actually shorted this because the GDX was it was hard to borrow. But anyway, I'm not shorted now, and I think at this point some people are trying to look for some kind of bounce here, and the pivot here is 86.20. So if they try and push it below and it can't get below and comes back up, maybe you'll catch yourself a little bit of a cash flow trade, considering from 123 down to 86. You're talking a 30-point or so move lower, so maybe you can catch 5 or 6 on the reverse side with a calculated plan, Chelsea, and that's the key, to make sure it's calculated, because if you started buying on day 2 down, there's no way you hold in through that day 3, especially with something like Nugget.
Right. And do you have any other closing thoughts as we head into the jobs report tomorrow?
The market, in my opinion, is kind of bent. Some names are broken and some sectors are more broken than others. But, we're still, the S&P is 3% off highs, and we're still, very far off what happened in the first quarter in January and February with that double bottom. So the question is, does this complacency pullback turn into something bigger? I'm not sure. You look at the spiders here. Overall, technically it's still fine. You look at the size of the move that you've seen since this double bottom. So yes, has it lost some upper momentum? It did right there. But still, it's above the 50-day, above the 200-day, and at this point, people were upset about the speed and how far this rally went. So just don't be upset when it starts to pull back, because this could create an opportunity if you're looking at it, with the right lens. And at this point, for more downside, you probably have to see the 8 and 21-day turn into resistance again. And remember how it got rejected here at 208 and change. Now I think between now and the jobs report tomorrow, you'll see whether or not the bears could control this descending channel here and reject price a little bit closer to 207 if it can get there.
Great. Thank you, Scott.
Well,
Everyone have a great trading day.